In this video, I want to share with you 5 myths that kept me stuck in trading for multiple years. Knowing these things probably would have saved me a lot of time, and I want to share these with you because first of all, you can improve, get better results, and that's what I'm all about. So let's dive right into it. Currently staying in Interlaken in beautiful Switzerland. I'm going to put some clip here on the video. It's really awesome, really cool place. Before we dive into the video on the 5 myths over here, I want to make sure you understand that these are not surface level tips. These are things that I actually went through, I've actually experienced. So if you like the video today, if you got some value out of it, make sure you give it a thumbs up and we are going to dive right in. All right, first myth is that more chart time will make you a better trader. Now you hear this advice all the time. People are going to say, oh yeah, you need to be at the chart. The more you watch the chart, the more you understand the patterns. And I understand the logic behind it. It's like, the more you look at it, the more able you are to spot the things on the chart. But what I found for myself is that the more chart time actually confuses me the most. I'm starting to see more patterns, more things that I read about in books, especially if you start to learn other patterns from YouTube or from the books. You start to go on the chart, then you see all these things and you kind of hesitate more. It's actually the inverse. The more time you spend on the chart, the more confidence you lose in your ability to trade in your patterns, the more confused you are. My performance in trading always improved when I traded less, so I had less chart time and placed less trades, and I reviewed more. So I look at my trades at the end of the day, at the end of the week, look at how things went, look what things went well, what things didn't go well, and what my best setups have in common, what the worst setup have in common, and try to not repeat those mistakes again in the future. Here's what I want you to understand and to remember. You don't become a better trader by spending more time on the chart. You become a better trader by focusing on one key pattern and becoming the master at it. By the way, if you want to see some patterns that I trade, things that really work well for me, a link below is going to be a free course I have on how to trade trends, what patterns to look for, what indicators to use, if you want to kind of see how I do it, and also what works well for me. Check out the first link below. It's totally free. There's no upsell or add-on or anything like that. It's all going to be kind of pure value, so you can watch the video, get some value out of it, and hopefully this will help you to have better results in the future. The second myth I had to deal with a lot, and that kept me stuck for many years, is thinking there's a strategy out there that could lose less money. If you look at other strategies and you see on YouTube people talk about stuff that doesn't lose money, usually it's all about how you manage your trades. If you manage your trades really tight and you can have a very small targets, of course you have less losses. It's normal. If you manage your trades more loosely or you can get more room or you go for bigger targets, then of course you have more losing trades. It's just part of it. The best strategies have drawdowns too. They are part of it and you have to get used to it. And you can also make good money while you go to drawdown sometimes. You go to the drawdown, then you can recover fast after, then your account scales up from there, then you go for more capital, and you still make a lot of money that way. Even if you have drawdowns that last a few weeks or even a few months sometimes, you can still go and make a lot of money after that. What matters the most here is that strategies are repeatable. You are able to go in the market and trade them. You are consistent with it, and it can be scaled up over time. And no matter how much losses they have in the short term, no matter how long the drawdown lasts, if it's making money long term, that's good enough. And you manage your risk and consequence to make sure you don't lose too much money at the same time. I just want you to understand and remember for this. If you always jump strategies trying to find something that doesn't lose money, you are never sticking to it long enough to actually make money with it. And that's a big problem. Stick to something for a while, see the result. If it doesn't work at all for a long time, maybe you want to tweak it or look for something else. But actually stick to it for 30 to 50 trades minimum, and you see how the results actually turn out pretty good. The other myth I've been stuck on for quite a while is the common thing about trading is 80% psychology, 20% strategy or something of the sort. People sometimes think that the only way to fix bad trading is through like having the right mindset, learning about different skills, meditation, maybe patience. Now, mindset for sure helps in trading, but it doesn't replace having a good system and having good rules on when you're trading. I found for myself that I can have better results by having clear rules than by actually kind of working on my mindset for a while, getting a mindset coach and all that kind of stuff. Now, there's a place for mindset work, of course. Trading is part mindset, like anything else in life, but you cannot fix inconsistency in trading with a mindset. You fix it with rules and clear systems that actually work. I had the chance of working with like really good mindset coaches out there and really good training psychologists, and I've learned a lot from it. But at the end of the day, what really works day to day is a lot of the rules I have and the systems I've made for myself. I don't show up in the market trying to be motivated or trying to be disciplined. I show up in the market with a clear plan, and that plan makes sense because I've tested it and I know it works. And there's no reason for me to go and trade something else. There's actually no reason to do something else than that. If I were to go in the market one day and like take random trades and go and increase my risk, I know it wouldn't make sense to me. It would be stupid to do it. So I just show up, do what I gotta do, and things work out fine. Maybe I've built a good mindset over the years, for sure. And maybe the coaches I've worked with help for that. But trading is not only or mostly mindset. It's all about combining mindset with a proper system. And speaking of something else that's really overrated is the common advice of or you need to risk 1% per trade. The myth is if you risk 1% per trade, you'll be safe. It's kind of like a golden rule for traders. But what I found is that in a big drawdown that lasts maybe a few months sometimes, which can happen, 1% is way too much to risk on a trade. If you're okay with risking 20 to 30% of your account and losing that on a drawdown, then of course you can risk 1% per trade. That's fine. I found that most people cannot handle a kind of loss. Once they get to 10%, maybe 12 to 15%, they start to make stupid mistakes and bad decisions, and then things kind of go down the hill from there. So you want to be careful to really set your risk to something that works for you and adjust your risk based on the market context or even your confidence level or even like the prop firm rules. If you trade with a prop firm, you don't have to go and put in the same risk all the time. You can change it if the market is moving fast or if things are crazy or if Trump says something bad, you can always change your risk and adapt for that. If you feel scared about taking a trade, you could always lower your risk. So if you have a loss, you don't feel bad about yourself anymore. What I want you to get away from this is that there's no safe risk per trade, but there's a smart risk for the current market and your situation. All right, the fifth myth over here, we're getting at the end, and this is really a big one. So you want to stick around for this one. I'm not going to repeat this multiple times. It's very important. You don't make more money in trading from risking more. Actually, the myth should be you have to risk more to make more money. That just doesn't work at all. Now, when you start out in trading, of course, you go online, you might find, it's funny, I found this when I first started out, like a calculator online. You find a nice calculator online to tell you how much you would risk per trade, how much you have in return, if your win rate stays the same and stuff. And that's cool. Like you can play, okay, 5% per trade. I'm going to make like 20% a month. That's awesome or more. And it just feels good. It feels pretty cool. Until you realize that this leads to big drawdowns and you have a much higher risk of fear, hesitation, or making bad decisions because you have a risk that's too high. Your risk always dictates how badly you behave. So the more risk you put in a trade, the worse you'll behave and the worse decisions you'll make. If you put in a small risk, your decisions are going to be better. They won't be influenced by the fact that you could lose a lot of money. And that's really important to understand. Nowadays, personally, I risk the least I've ever risked in my trading in terms of percentages. It's a very, very small risk that I put on my trade. But somehow I make more money than I've ever did before. I maybe 10x or 15x what I made back in 2017 when I went full-time. And how did I do this? Well, I just increased my capital. So my capital doesn't work for me. So I go into a trade, I put in this very small risk per trade, I make the returns I got to make on that trade, and that equates to a lot more money than before. What this does is I have a lot more consistency because I don't have any big kind of drawdowns. My drawdowns are 10% maximum, maybe 12 to kind of really push it, but not more than that. And I've had much bigger drawdowns before and I risk 1% per trade. So now it's a lot smaller and that makes sense for me. Now I understand for sure that getting there takes time, but if you build the right habits from the start of having a small risk per trade, that's maybe 1%, maybe less, maybe 0.5%, then you can really kind of sustain that for the long term. And then you have much more chances of having a prop firm or private investors fund you for your trading because you have a small risk. They see you don't lose too much money. It's consistent. You don't make bad decisions because you risk too much. And you are able to scale up and grow your account over time. That's really important. The key thing to understand here is that small risk and big capital is the only way to make more money consistently. Not really go and gamble or put high risk on the trade. Keep it small, keep it consistent, and you're going to see results play really well long term. Now, if you want to see how I trade, the first thing you do will be a free course where I go through how I trade trends, especially on bigger time frames, how I'm able to stay consistent with it, the setups I look for, the indicators I use. It's all going to be included below. You can check it out. It's a free course, and hopefully you get some value out of this. I'll also link below some videos if you want to check it out too, where I go through some trades, some performance, my stats for last year, and of course this year. So now I go through my trades every month, and you can have a look at that. If you like what you see, make sure you subscribe to the channel here. I publish videos like this 3 times a week, and I'll catch you back here in the next video pretty soon. Ciao.